Welcome to Leaders in Lending. I'm your host, Jeff Keltner. Today, we're featuring my conversation with NAFCU President and CEO, Dan Berger. Dan gives us a great perspective on advocacy priorities, what he's seeing from regulators in Washington, and also the key priorities he's hearing from the credit union members that he has. I think it's a great insight into some broad industry trends and a really useful conversation. It's also one of a number of recent conversations that aren't with specifically lending executives from banks and credit unions, but subject matter experts in areas I think are really interesting for the audience. So I'd love to ask you if you have suggestions for specific guests or topic areas you'd love for us to dive deep into. I'd love to hear those. I'm easy to find on LinkedIn, or you can just email me at jeff@upstart.com. I'd love to hear your thoughts about other guests and topic areas we should dive into on the podcast. But for now, please enjoy this conversation with Dan Berger. Dan, thanks so much for joining the podcast. I really appreciate you joining us today.
I look forward to it.
Yeah, I'm looking forward to a good conversation. So, one of the things I wanted to give you an opportunity to do up front is I know that NAFCU's not a bank or a credit union, but would love for you to kind of just give us the quick background on the organization and kind of the role you play in the industry for any of our audience who aren't familiar with you.
Yeah, thanks, Jeff. We are a national trade association in the Washington, D.C. area. We advocate. It's our job to help the 5,000 credit unions across America that in turn serve 125 million American consumers. And it's our job to create a legislative and regulatory environment in Washington, D.C. That helps them continue to grow and thrive. And then another part of that is that we vet partners, and we have a preferred partner program here. So we vet Fintechs and other service providers to help credit unions grow. Because we do three things here. We help credit unions grow, and grow. So it's our job to put as many tools in the toolbox as possible to help credit unions grow. And that's our focus. Our mission, and actually our mission statement, is to strengthen credit unions. And that's what we focus on here at NAFCU. We have 125 million consumers that are served by our members, or not just in the U.S., they're global. You have some credit unions out there, whether it's Navy Federal, PenFed, that have membership around the world. And so they need to have that kind of exposure to fintech in a regulatory and legislative environment that allows them to operate.
Yeah, that's great. I love the simplicity of grow. It's like real estate, right? Location. You know what's important when you've got it three times.
That's exactly right. That's our focus.
Well, good focus. From an advocacy point of view, I mean, one of the things whenever I talk to people in Washington, I know the Biden administration isn't really new anymore, but I do think we're on the verge of seeing some of the real impacts of changes to regulatory bodies or legislation. I'm curious, what are the major focus areas you have, the things you're hearing from your members and that are kind of top of mind from an advocacy point of view in DC?
Most of the CEOs that I speak to on a daily basis want to be left alone. So they already know the hoops that they have to jump through from a regulatory standpoint. They just don't want any legislative regulatory spikes, anything new, because that just halts everything. Everything comes to a screeching halt to have to do things. Sometimes you have to change processes with their core processor, or whatever it is. Their internal systems have to be changed in order to provide data for some of these, like the CFPB and the NCOA. So if there's no disruptions and they can plan and, more importantly, execute throughout the year, whether it's this year or 2 or 3 years down the road, that's extremely helpful. They just don't like these surprises that come up. For example, when Dodd-Frank came up, that was extremely disruptive to the financial services industry, including credit unions. And so no surprises. We like expectations, just almost any business. No business out there likes surprises from a regulatory standpoint. And that's what they're telling me. Said, hey, just no surprises. Let us do our business. Let us serve the 125 million American consumers out there, and let us do what we do best in providing, loans and other products to their members. And so they just leave us alone is kind of.
So they're generally happy with the current environment. Just saying we don't want to see. Are there any specific areas where they are looking for change or clarity, guidance on new initiatives or directions they'd like to head, where they'd like more clarity or more guidance from the regulators, or is it really just if it ain't broke, don't fix it? Don't mess with the things that are working.
There's always new powers and authorities that they would like to serve more underserved areas and really help the unbanked. You see a lot of the big banks pulling out of different areas. You're seeing regional banks pulling out and what's creating, financial services deserts is what they're calling it.
Mm-hmm.
And we want to serve those areas. The banks don't want to serve it. Credit unions do, but then the banks sue us and don't let us do it. And so there's some legislation out there to kind of increase our ability to serve those folks in the underserved communities is what we do well. And from cradle to grave, we really were started to, as an industry, to help the working men and women of this country, and they want to do more of that. And so that's a focus, but most of it is just literally leave us alone. They are concerned about some of the folks that are coming into the CFPB and the NCOA and how far left that pendulum may swing in terms of a regulatory environment. But right now, they are very pleased the way things are.
That's interesting. One of the things I've always appreciated about credit unions, and I don't think, I came from the technology space and came into financial services and knew about banks and credit unions, but hadn't really appreciated the difference. And in particular, the difference in focus on consumer banking, consumer lending versus more commercial stuff in the banking side. And I've always appreciated that as we've gotten, as a consumer lending company, that credit unions are really focused on that consumer as their core constituency versus more commercial type stuff. Are there trends you see, products, services, geography? You talked about serving more of the underserved communities. Like, where do you see that focus on consumers taking credit unions in the future? And what are you hearing about shifting product mixes or demand for different kinds of things? Like, what's kind of happening out there on the consumer side?
We've always been, granted, and everybody, you've heard it before, and everybody that's listening to your podcast has heard it before, but the pandemic increased digital investment and digital transformation. But credit unions, for the most part, have done a really good job to already be on that journey and going down that road. But I think what the most important part, that the trends that we're seeing is really focusing on the member experience, the member engagement. So across all platforms, that it needs to be relatively seamless, relatively frictionless, whether you're using your phone, your watch, your laptop, or if you go into a branch, it all has to be a similar experience. If you have a hiccup anywhere along that engagement, that becomes problematic because everybody's used to, the Amazon, going on Amazon and purchasing and doing things like that. They need to have that seamless, similar experience. And that's where you're seeing a lot of the CEOs I talk to focusing on trying to develop relationships with fintech partners that provide that seamless approach across multiple platforms.
Is that an area from you talked about kind of an advocacy angle of what you do, which seems to be don't break the things that we know how to do and that are working well. On the vetting of partners, is this kind of digital experience something that you're really focused on? And I'm curious how you think about that, because there's a lot of different players that approach that from different angles, and how you think about who you're working with or what you're hearing from your membership in terms of what they're interested in having solutions for outside of just kind of the unified concept.
No, absolutely. It is a major focus, and it's the focus. We have a subsidiary called NAFCU Services where we have a preferred partner program, and we bring in partners that have been fully vetted, that have been tested, that credit unions that our members can utilize, and it's vetted, and it's major focus. That's all NAFCU Services does, is looking for products and services to help credit unions grow. And so that's the focus that they do. That's the filter that they use. And they're looking for real thought leadership. They're looking for best practices. They're looking for folks to be a genuine collaborative partner. And it's fintech has become such a commoditized term. And in some spaces, and even in the credit union industry, it has kind of a negative connotation in certain circles. And it shouldn't. You have to partner with fintechs in order to be successful, because very few credit unions have the financial ability to hire 100 technologists or software developers to go it alone. So you have to have partners out there, trusted partners out there. And so that's the key, is they look and find, as like you said, there's hundreds, if not thousands, of new upstarts coming around to do these kinds of things. They do the vetting for that, and it's a trusted source.
What do you find to be the hardest part of that vetting, or the hardest kind of fintech to do? I mean, I imagine as a fintech that partners with credit unions, we certainly go through the credit union vetting. And I think it varies a little bit depending on what they're interested in. But do you find parts of that are more valuable to your membership in terms of helping with their process or the areas that are the hardest to get the right answers? Maybe this is a question more for the fintechs who want to prepare themselves to go through the process. But where do you see the hardest part of that vetting process?
I think the hardest part is really proof of concept in terms of actual experience. Has it been piloted? There's a lot of shiny squirrels out there that we all want to go and chase, but has it worked? Do you have an example? Do you have a case study that it worked at XYZ Bank or ABC Credit Union? That helps everybody the process, and then that's the hardest part. There's a lot of really robust and dynamic companies out there providing really interesting products and services, but there's no real experience behind it in terms of it being executed at a financial institution. And so that experience is really important. And they look at that kind of stuff, and they kick the tires a lot in order to do the vetting.
That's good. You got it. There's a lot of tires to be kicked. I think this space will be really interesting for you guys because I've been a believer for a while that, and I'm curious your opinion. A lot of fintechs seem to be trying to compete with the credit unions or the banks as the kind of primary experience, and then there are others that are choosing to more of the partner route. Like we're not going to try and replace the current financial services industry. We're going to be a partner to it, and many people view that as a new age thing. But I also go like, that's what FIS and Fiserv and Jack Henry. The idea of technology players that serve financial institutions is kind of as old as technology and financial institutions are on some level. But I'm curious if you're seeing a shift in mix from people you're talking to and a shift in perspective from the credit union executives when they think about fintechs as partners versus competitors, because there's definitely like a little bit of both, right? There are those out there buying banks, trying to become really the equivalent of what the credit union does today versus those that are out there to partner.
Yeah, that's a really good point, Jeff. I think the biggest differentiator that you'll see here, no matter how many full-page ads or cool ads they put on CNBC, there's not a fintech out there that has the trust that credit unions do. And then that trust has been done over 100 years of existence. And it's our business model, too. We're not-for-profit financial institutions. We're truly democratic institutions. It's not right or wrong, the difference between banks and credit unions. It's just different. So the focus is genuinely on the member. So they can plan long term, what's in the best interest of the membership, what's in the best interest of that credit union. You don't have some 24-year-old punk kid analyst on Wall Street beating you up every quarter. So you don't have that pressure that some of the other financial institutions do. It's just different. And so that I think that is a genuine benefit that credit unions have over other FIs. And so I think you're going to see that play out. I think a lot of these companies, and we talked about a little bit earlier, the burn rate for some of these startups is unbelievable. And so sometimes it's easier to go with a partner. And then you're beginning to see a lot of fintechs going, you know what? We thought about it going ourselves. We thought about trying to get a bank charter or an ILC charter or whatever it is. You know what? It might be just better to partner with banks and credit unions as opposed to trying to go in it alone. Because the bottom line is the regulatory schematic that we have to be part of, that the fintechs will eventually be part of, even though they're kind of venue shopping now, trying to kind of get around the regulatory requirements that are out there. It'll be problematic because there'll be some hiccups and some headwinds that some of these fintechs will experience in the future. And I'd want my money with a regulated entity. And I think you'll see things shake out. I bet you 98% of those will end up going away, but the banks and credit unions will still be there.
They have weathered many a storm, historically speaking, at least. As you see this kind of shift in the fintech partnerships, are there product areas or kind of asset classes that you see a focus on improving? One of the things that's surprising to me was the amount of unsecured lending and auto lending that credit unions did versus banks, particularly direct lending in the auto space. Like indirect is kind of I won't call it a commodity, but there's kind of a well-known way to grow that portfolio. But direct lending in the auto space is a little more challenging, and I see banks and credit unions have been there much more so than most banks I speak to. But I'm curious if you are seeing any kind of either driven by consumers or by credit unions that most that I talked to are sitting on more deposits and less loan demand than they're used to seeing. What are they thinking about as in terms of how I, from a product point of view, put those assets to work, what my consumers may want and how that's changing and how that informs their strategy about what they want to put in the market?
Yeah, that's probably one of the major, besides cybersecurity, that's probably
Yep.
one of the things that keep them up at night is how to deploy that capital that they're sitting on,
Mm-hmm.
especially with the Federal Reserve, shoveling money into the system. And, that's what's keeping them up at night. But this other side of the ledger is there's just not inventory out there. And so they have the loan capacity. The vast majority of them have the technology necessary to provide the various loans, whether it's consumer loans, mortgage, even business lending. But the focus has to be being able to make sure there's inventory out there. I mean, there's no homes for sale. There's a shortage of used cars out there. There's now a shortage of new cars because of the supply chain with chips
Yeah.
and things along those lines. So that's the problem. That there's the capacity. There are the lending platforms such as yours and others. That's the thing that's out there. They have the capacity to want to do it. The technology makes it smoother and more seamless. But if there's no inventory, if you only have one button to click, but you don't have anything to buy to click on, there's nothing there. So that's what's keeping them up at night is how we do that. And so that'll shake itself out, but it's going to take some time. So some of those hiccups in the supply chain, all those baby boomers buying their second and third homes out there, that has to kind of shake out a little bit. And of course, the chips and everything that the automakers have to get situated and get right needs to be cleared out too. There's a kind of clog in the system at this point. But from a technology standpoint, they're all investing heavily, and they're planning to do even more across the realm. Like we talked about a little bit earlier, was as long as it's seamless, they're looking for ways to compete with the rocket mortgages and things like that.
Yeah. Are you finding anything that's been particularly successful in putting those assets to? I mean, it's certainly every conversation I'm in is like, God, I got cash and I got nobody coming in for the for the loans. I mean, have you seen any trends about what's actually been successful for some of your members in overcoming that, or is it still, they're waking up in the middle of the night trying to find a red button that actually does something when they press it?
They're waking up in the middle of the night thinking, what kind of red button do I need in order to make this work? And it's still making them toss and turn. The CEO's out there, he or she is tossing and turning how to get some of that capital deployed. And that's a major concern that they have, because they run on such thin margins, especially in this low interest rate environment. The non-interest income is not much there. It's credit card interchange, maybe courtesy pay, and some of those other channels that they have. So they need to lend this capital out, and that's what really keeps them up at night.
It's interesting. It's such as someone who comes from the technology space and from a startup space, the idea of having too much cash and being uncomfortable because of it has taken me a little while to fully understand and grok. Because it just isn't a business doing well when it's got too much cash, and most of us it is. But obviously, when your business is to take deposits and lend them out, more cash and less, you don't earn enough to pay the bills on that. And so that's been it is interesting to hear that. But it's maybe the most consistent thing I hear from any entity I talk to.
Yeah, I hear it every day. I was out giving a speech, as I mentioned, out west earlier this week, and every CEO I spoke to, they have the means and the necessity and the technology to do it. They just don't. There's just not the inventory to push that button
to actually drive the demand. So demand driving is the thing that's in short supply right now. I did want to ask one more thing. You've talked a lot about the kind of digitization, the investment in technology. I think it's maybe the trend that was most accelerated by the realities of COVID, and grandma and grandpa who never did mobile deposit didn't want to go to the branch. And so they did a mobile deposit, and they're on that trend now. So I view that as having accelerated. What I hear from most execs is, I had a 10-year roadmap and it's now a 2-year roadmap to get all my services digital. I assume that's the same thing you're hearing. What I'm kind of curious about is, do you see the outcome or the priorities in terms of what we digitize, when, or how shifting because of this? Is it more just a pure acceleration of the same roadmap, or have we learned things about what consumers need and how we need to digitize, or how the consumer experience can change that has shifted because of the recent experiences of kind of an enforced digitization in a very short time period?
Yes to all the above, Jeff. All the above. It needs to be faster. It needs to be better. It needs to be more seamless, more frictionless. The experience has to be smooth. All the above. And it's really interesting that everybody had plans, and it's all changed and accelerated. But yeah, all the above. The digital transformation is happening so rapid. But they really need to focus on what does the member really want, and what do they really need. Don't get distracted with all that noise that's out there. And that's the thing. Don't chase the shiny squirrel that always shows up. Find out specifically what your members need. And that's really important to have. And that's the reason it's even more important to have that partnership, that collaboration with the Fintech that understands your credit union, that understands your financial institution, but more importantly, understands your member, your customer, and they have to have that understanding. It has to be a granular understanding as well. What motivates them? What's the clog in what's the stick in the spokes? What's the clog what problem can you solve? What can you make a smooth transition for them, and a smooth experience and a smooth engagement? That's the focus that they need to have, but it's happening really quickly. But there's a lot of noise out there. There's a lot of new companies starting. There's a lot of legacy companies coming up with new stuff. So there's a lot of noise. So the CEOs and the management teams of credit unions and other FIs need to have a firm understanding of what their member and what their customer wants and needs, and then find that partner to help. I mean, they're getting inundated by vendors and partners left and right every single day. They have to figure out from a strategic standpoint, from a strategy, what do you want, and then bring in the partner and the tactics after that.
Yeah, I love the focus on starting with the customer, the member. And I think the hardest part of the acceleration is probably the prioritization. It's like, I know there's 50 things I've got to do, but I can't do 50 today. And I got to figure out how I sequence these things and what's most important, and how I kind of prioritize a very long list. I mean, technology companies are always in the space. I've always got a list of 50 things I want to do and time to do 5. And the question is always, which 5? And by the time I knock those 5 off, I've added 10 more to the bottom. So it's a never ending cycle. That's the thing I'm really curious how they're doing well, because it's that prioritization is saying, okay, I know I need to get everything better, faster, cheaper, easier, digital, mobile, but like, where do I start, and what do I make my priorities 1, 2, and 3? And how do I sequence what comes, next? I think that's the hard part for this process, because you can't do it all, and you certainly can't do it all at once. So you've got to pick and choose, and that's I think the challenge.
Especially with smaller FIs, you have limited resources, and so you really have to be obsessive about what your member needs or what your customer needs, and then punch through that noise and then find the appropriate partner. And that's what NAFCU Services does so well here at NAFCU, is punching through that noise. You see, they look at 1,000 different shiny squirrels every year, and they only pick 1 or 2 to bring into the fold. And so that's the kind of vetting that financial institutions have to have in order to punch through that noise, pick the right partner, and really be obsessive with what your membership needs or your customer base needs. And then you'll find those partners, and then more importantly, you got to execute. Yeah,
execution is always, I think, underappreciated in some of these areas. You feel like if you make the right decision, it's going to work out. And my experience is, execution is 80% of the problem. You can have the right answer, and if you don't execute it well, it's not going to work for you almost ever.
I agree. I think execution is king. You can have the best strategy in the world and the greatest idea and the biggest goal, but if you don't execute, it's meaningless.
Yep, 100% agree. So I wanted to shift back to advocacy, or at least the regulatory world a little bit. Which is, the thing Upstart does uniquely in the world is really the focus on the application of AI to credit and lending across the lending lifecycle. we saw the banking regulators put out a joint statement, kind of recognizing, supporting the use of AI and alternative data in the context of lending. I think they're now looking at ways to provide more specific guidance to individual financial institutions on how to think about oversight and governance of those kinds of approaches, particularly in the context of partnership models. I saw that you sent a letter recently to the NCUA on a similar topic. Where do you see the life cycle of adoption of AI within credit unions, and how do you think about the role of NAFCU or the regulators in kind of facilitating the adoption and deployment of these technologies within the credit union ecosystem?
Yeah, it's interesting. AI and robotics are such a key component in order to get economies of scale within your institution. And then, so that's our thing. And I mentioned it earlier, Jeff, that we're trying to get as many tools in the toolbox as possible. AI and robotics and having partners that specialize in that environment is really crucial. So we're urging our regulator, our prudential regulator, the NCUA, to allow that kind of innovation and experimentation and execution to occur, and don't disrupt it with any spike in regulation or anything like that, but just let them operate and examine us, which they do. That's extremely important for them to continue to do the safety and soundness checks that they do.
Of course.
But the focus on AI and robotics is really, really key. We push it here at NAFCU. We talk about it on a regular basis. If you're not looking at it, and if you don't have a plan to actually implement it and execute it within your institution, you're going to get smoked. You cannot, number one, you can't go it alone. You can't do it by yourself. You have to have an organization on board like yours, or it's just not going to work. But more importantly, you don't want interruption or disruption from your prudential regulator stopping that. You don't want to stop the planning or the strategy. You don't want to stop the execution, because there's a lot of money and resources that'll be thrown at it. And we just don't want anyone to impede it, including our regulator.
Are there things you think the regulators could do, or you through the vein of NAFCU or NAFCU services, in terms of the thing I see, I guess, the most is kind of how do the old regulations apply? How does my governance policy apply to a model that doesn't, I can't print it in a table and put it in a PDF and tell you it's stamped. And so the kind of clarity in helping understand how we apply the old rules to a technology that maybe doesn't quite match all the definitions is maybe an area where we're not talking about new regulations. We're just talking about helping it be more clear how the old regulations apply to a new set of technologies. Is that an area where you expect or you think the regulators could be helpful, or you could be helpful to the credit unions and how they think about, we have to do model governance and we have to do it on a new kind of model, and how does that apply to machine learning or AI in a way that maybe it didn't to old policies, that kind of thing?
Yeah, that's something we discuss internally, if not every day, every week, is best practices. How do we do it? Here's some suggestions to the NCUA. We can never tell them what to do, but we do write letters and have conversations with them on a daily basis about what would be helpful and to clarify and give us rules of the road. You give us rules of the road. My CEOs, the men and women that run credit unions, they'll do it. They just tell us what the rules of the road are, and we will do it. Just don't impede. Don't put a roadblock up on those roads, because AI and robotics is a major investment. And the vast majority that I've spoken to are headed that direction if they're not already doing it. And you just don't want any impediment into that regard. But yeah, that's something we talk about on a regular basis here, Jeff.
When you say AI and robotics, well, I don't do robotics, I just do AI. But I'm curious, where in the credit unions do you see those things being most immediately deployed? I mean, I can think of almost nearly infinite list of places I could apply those kinds of capabilities. Are there specific focus areas where you see the credit unions trying to apply those technologies in the near term versus what might happen over the longer term?
Yeah, everything. Looking for, if a credit union has a relationship with a member and they only have 2 products or services being utilized, there's probably 7 or 8 that can be upsold to them, where AI could be a very powerful tool to get that done. They have so much data. The vast majority of my members not sure what to do with all that data. And so then they need a partner with AI capabilities to do it. But most of it's in the application process and the approval process and everything else. The AI and finding it, the robotics and the processing of it, and to make it quickly, instead of having a whole bunch of people looking at things, you have a bot looking at it and trying to explain and make the process a little bit smoother throughout the organization. All that is crucial. And I think if they're not doing it, they're going to get smoked because the bank down the street's doing it. The fintech that's in the space is down the street doing it. The other credit union that is embraced it is doing it. You're going to be left behind. And so it's going to be so important for folks to focus in on AI and other platforms in order to be successful, in my opinion.
No, I agree. It reminds me a lot of, I was at Google in the very early days when we first coined the phrase cloud computing. And I remember having a conversation with the CIO, who shall remain nameless, who said, I think anybody who moves to the cloud is going to be fired for gross incompetence in the next 5 years. And I kind of said, well, I think the CIO who doesn't move to the cloud will be fired for gross incompetence in the next 5 years. And well, I was still around to have that conversation in my job 5 years later, and they were not. So AI, I don't know that it's 5 years, but I do think ultimately the competitive advantage that accrues to those who can use these technologies well will make those that don't non-competitive, and it'll be a real hindrance. And there's a lot of advantage to being earlier on the bandwagon than later. If this is where the world's going, being there earlier lets you be better at it and faster at adapting it. And I think there's real advantages to that.
Yeah, I think that you have to have the mindset that you've become a digital first company. And then I'm talking about a credit union. We're a digital first company as a trade association, which is really, really rare. But you have to have that digital first technology. Randy Salsa, who's the president of NAFCU Services, we talk about this literally on a daily basis, and we talk about it. If I was running a credit union, I'd call ourselves, at least internally, a technology company that provides financial services. And then I would build it out. We just happen to have a credit union mission. We happen to be not-for-profit, and we do really take really good care of the American consumer. But in our mindset, to create a mindset throughout and a culture throughout the organization, throughout the credit union, we would be a technology company delivering financial services. And that's how I would build upon that. And that would include AI, that would include robotics, that would include a lot of things in order to give you that competitive advantage going into the future. And I agree, if you're not already working with an organization like yourselves, I think you get smoked. I just think that you have to at least have the process, begin the discussion, and have a firm understanding of what the power behind AI. And I think that's overwhelming to some people. Because again, everybody's, it's all about data. It's about data. There's a ton of data. The core processor controls all your data. They got tons and tons of information that you have. What do you do with it? And then if you could drill down into your data and utilize the tools, AI tools, the power there, is the economies of scale. Again, you're operating in a low interest rate environment. Your margins are minuscule.
They're tiny.
And if you can use a tool or any platform that helps you get a benefit, why wouldn't you utilize it? It makes no sense to me. And so we urge that from a NAFCU services and a NAFCU standpoint. You got to embrace the Fintechs out there that will help you grow.
Do you have advice for the Fintechs? Most of my listeners are not Fintechs, but occasionally I'm curious, for those Fintechs that hear the message that the future maybe really is a combination of Fintech players and financial institutions, what's your best advice for the Fintechs and how to be the best partner for a financial institution and prepare yourself for actually playing that role effectively?
Yeah, I would start by treat them as a partner from the very beginning and understand sales pressures and sales goals, but treat them as a partner, not just a sales prospect, and really develop a relationship and get granular. What is their membership needs? What is their member needs? What are they trying to accomplish? How are they trying to better serve their members? What economies of scale are they trying to look for within their institution so they can better serve their member? And really become a thought leader in that space. And so it's a long sales process. And I understand the pipeline is slow and moving.
Yeah.
And folks like yourself like it to be quick, and I do too, in fairness. But you want to be that thought leader. So when the time comes to choose somebody, they go, you know what? They didn't come in there and bring me a bunch of cookies and do this whole hard sales pitch. They were this thought leader. Here's the data. Here's what your members want. They generally explored a collaborative relationship. They have a very strong understanding of my credit union. They have a very strong understanding of my membership and my member. And then when the time comes for them to choose an AI partner or any other vendor, any other fintech, then you go, you know what? That Jeff Cat, he understood exactly our problem. He understood our needs. And who are they going to call to do business with? It's going to be Jeff. And so that matters. And you see that old school approach, and it just doesn't work anymore these days. You have to be a genuine partner and be collaborative. That'd be my suggestion.
I like it. I think it's the advice we certainly give our team. And let's a lot of listening and less talking is, I think, a good part of that. If you're not having a dialogue, you're not really doing it right.
Expert. You're going to be the subject matter expert. Be their partner. You're helping. You have to remember, they're doing the best they can. A lot of times with very limited resources, and that's time and money and personnel. And so if you can be a partner to help them navigate through all this, not just a sales pitch and just bombarding them with the sales speak that's out there that we've all heard over and over again, but you provide them with the subject matter expertise. You're a partner, and I think in the long run that brings a lot more business to a fintech or a partner that we deal with.
Great answer. Note for all the fintechs out there: be a partner, not a bad sales guy. No watching Glengarry Glen Ross before your sales calls. That's the wrong approach these days.
Yeah, that old school used car, coffee is for closers kind of thing is just, it doesn't work. I mean, credit unions tend to be a little smaller than most banks, but these are sophisticated financial institutions.
Yep.
And they're getting inundated, and so be a partner.
So Dan, is there a question that you were hoping or expecting that I would ask that I did not get to today? Did I miss anything on the list?
I think the question I would ask why credit unions are so trusted, and I think I touched on it in the very beginning, and I think that
you did.
NAFCU advocates on the best industry in financial services. We are the white hats. We didn't get fined $250 billion for fraud against consumers. I think that we are the best choice for financial services for the American consumer. And that trust factor is huge. And we focus on it every day here to try to provide the best partners and the best resources and products and services to help credit unions grow. And that's our focus. We're here to help credit unions grow, period. That's what we're here for. That's what they pay their dues for us. That's what I advocate for. And so we really appreciate the time that you've given me this morning.
Yeah, well, it's a great way to bookend the conversation. I think we started with grow, grow, grow. And we know what your focus is for your members. I do have, Dan, I don't think I put these on the list when I sent them for you, but I have 3 questions I ask everybody at the end of the podcast. So you'll have to go into these a little bit cold. But they're hopefully not too hard for you. One is, what's the best piece of career advice you've ever gotten?
The best piece of career advice I ever gotten was be enthusiastic and energetic no matter what task you've been given. And whether you were told to go make coffee or back in the day, make copies, make the best darn coffee you can, make the best, clearest copy you can, just always go in with, you're going to have to do it anyway. So you might as well do it with a really good attitude. And that reflects positively. That was the best attitude, because we all have had things in our careers that we didn't want to do, that you still had to do. And the people that really rise above and are noticed are the folks that do it no matter what, with a good attitude and enthusiasm.
Reminds me of those stories of the Pike's Place fish market, the guys who threw fish up in Seattle with such enthusiasm. I like that. So my second question, what's the best piece of advice you've ever gotten about, consumer banking, consumer lending, the kind of financial services industry?
To be open to new products and services and new platforms, and really focus on the member experience, and that's really important from a lending standpoint. The back office stuff and AI is extremely important, but also is the experience on the front end as well, and really focus on their experience. And if there's hiccups, if it's slow, it's not going to work, because there's going to be others out there that don't have those hiccups. And so I think the front end, that experience of the member or the customer is crucial with any lending product.
I love it. You remind me of a technology company. So true to your statement that the user comes first. Put them at the middle of all your thinking and processing, and you probably will end up in a pretty good place. So my last question is always, do you have a bold prediction for me about the future?
I think bold prediction. I think credit unions will continue to do really well. I think they'll do extremely well in the lending space. I mentioned earlier, I think a lot of the Fintechs that are, creeping into the lending space won't be here in 5 years. And there will be the credit unions and the banks that will still be here. And that's the reason that, partnerships with Fintechs are so incredibly important. I bet you 98% of them are gone, 2% of them remain, but banks and credit unions will always be here.
That is a bold prediction. I give you credit for that one. Fintechs are a popular space right now for equity dollars, I know, but the belief that I think we certainly agree that credit unions and banks are probably not going away, and that the right strategy for most of the technology players is to partner with the FIs that will remain and to provide the best consumer experience that way. Well, Dan, this was a great conversation. I appreciate your joining me. I had a lot of fun. You did a great job not having been prepared for the last 3 questions. So sorry I threw those at you. And thanks again for joining us.
Jeff, thank you so much for the opportunity. I'll do it again soon.
Yeah, we'll have you back.